Yeah. Well, well, basically, what happened was we was he asked me if I'm invested in AMC, and I said no. But you know, he, because obviously he's part of the focus and investing community, right? So he understands that our position in the way we approach trading. We're trend traders, and we make sure our trend is aligned, our bias is aligned, and you know we use certain indicators in order to qualify our trades, right? So essentially, he said to me, if I'm invested in AMC, and I said no, and he basically explained he understands why, but also said, like, you know he understands that this is not a technical play, this is a fundamental play, right? And I basically essentially said, well, I get that. If you want to do it, I get that. Number one, it's not a technical play at all, and the second part of that was, I understand that it's a fundamental play if you just want to kick the man in the nuts. I said to it's just like, if you just want to stick it to the man and essentially, use this as a kind of fight the power to get back to the system, then I can understand it on those kind of levels. Um, but in terms of, an investment or an investment play for myself, it's not something that meets my investment strategy, right? That's one thing, being an investor or a trader, you have your principles and your standards as to, what you would invest in and what you wouldn't. And, sometimes it's hard. Sometimes it's really hard. I mean, as I said, I was trading, I've been trading through financial crashes and when presidents have come into power and things like that. And when you have like certain things like that, you can see the markets just run all in one direction. Like, it is literally like ATM spewing out money, or like a tap just running water, and you can see it there. But because the setup does not, align with your trading strategy, as a good trader, you can't enter into the trade. Even though you see money just basically pouring out of a tap, you can't capitalize. You think, well, maybe I just scoop in and scoop a little bit of that. Just reach my hand out and catch a few drops, or a few pounds or a few dollars or whatever. But the part of trading is also about self discipline and mental discipline, and you don't get emotional by what the charts are doing. So even if you see the charts running, you don't get emotional and jump in, simply as kind of like a pact to yourself. It's like faith and trust in yourself that, I trust, like, I've done all the due diligence and research beforehand, and I understand why I have my edge, or why I have my trading strategy, right? So, once you have faith in that, then it's kind of like you're honoring your duty to stick to your trading strategy, because that's the thing that's going to carry you through this. It's the thing that's going to, protect you going through this, right? So, even when you see it running, you can't get involved, because if it's not set up in the way that it aligns with your trading strategy, then you just have to let it go. And not only let it go, you have to be, comfortable within yourself to be like, you know what, I'm letting it go. And I know I'm letting it go. And I'm not going to begrudge that I've let it go. Or I'm not going to be emotional that I've let it go. And I'm not going to be upset that I've let it go, and things like that. Right. So the initial thing was that, AMC doesn't align with my particular trading strategy. Right. I have faith and trust in my particular trading strategy, and it has worked for me for many years. It's never let me down. Right. And when I look at AMC, as I said in the video, you know, number one, it's a fundamental play, and I'm a technical analyst. But the second thing to that is, as I said in the video, even though it's a fundamental play, which is a short squeeze play, it's not even looking like it's playing out that way. Now, if you want to hold on to it as principle, as I said, to stick it to the man, then that's fine. But understand, it's that you're doing. You don't look here as, they say, investment play, right? So, I mean, everybody's different, right? Everybody has their own, investment thesis and investment strategy. Now, am I saying that it couldn't go shooting up? Of course it could. We don't know any future of any of these stocks, right? But again, this is why your strategy is important. Your strategy is important because this is the wild, wild west, right? And you need a sheriff in town to hold it down, right? So your edge or your strategy is the sheriff that tries to make some sense of this wild, wild west, right? So, you know, your edge is what protects you through the wild, wild west, right? So just getting involved in the wild, wild west, it's a lot of risks, but then again, a lot of risk equals a lot of reward. So, I just thought it was interesting because, I've been asked a few times about AMC. Um, and I thought, let me just put together a video just to explain my position on it. Explain my position on AMC. And as I said, it's really, to me, it's a hype stock or a meme stock. I wouldn't say it's a meme stock. Well, it's kind of a meme stock, right? It's like a stock that's, it when it first came about, it was actually a stock that had there's validity to it. Don't get me wrong. I'm not saying that there is no validity. As I explained in the video, when it first came about, it came about because, there was COVID had started, and a lot of, especially the leisure and entertainment industry took it hard. It took it hard because obviously, a lot of leisure and entertainment industry works on, people, footfall, traffic, people coming in, right? Crowds of people. And the moment that coronavirus came out, coronavirus and the governments were like, people can't gather together. And therefore, a lot of these social spaces were the first spaces to kind of get sacrificed first, right? So when you think about, you know, all of the fact that people can't congregate together, it's going to be the entertainment industries and the social spaces that are going to get hit first. So because this was on the horizon, the current state of cinemas, I mean, I think generally cinemas over the years haven't been doing too great. I mean, where I am, not too far from, well, it's not even, I want to say it's not too far. It's quite a distance, actually. It was one of these big cinemas. I think in the 90s, it must have opened. Yeah, it must have been in the 90s. It was one of these cinemas that have like a massive car park or parking lot where you can, park lots of cars, and on the grounds they had like a restaurant. I think they had like a pizza restaurant on there and a few different other things. And it'd be one of those things, back in the time, back in the 90s, where you would actively travel distance to get there. I think to drive there, I think it must have taken about maybe like upwards of half an hour, 45 minutes, something along those lines. It was far enough for it to be a substantial journey. You wouldn't want to go there and get halfway there and forget something and have to come back and go again. It was, a decent amount of journey, right? But people used to travel there. They they used to, enjoy going to the cinema. It would be like an event. We would say like, okay, this Friday or this Saturday, we the family will get together, or you get your friends together, get in the car, you'd plan, you'd go down there. Sometimes you'd buy your tickets in advance. So yeah, buying the tickets in advance for a certain showing. We'd get there maybe a couple hours earlier, get our parking space, go to one of the restaurants, eat, sit down. Like it was a whole ordeal, right? This was before, we had Netflix and, all of these streaming apps where you can watch these pirated copies of videos. And I think this was before the Chinese DVD man used to come into the barber shop and hand out the DVDs and all these things. So it was like, yeah, Sky before we had Sky and all of those things, No, I think we had Sky, but Sky back then wasn't Sky like it is now. I don't think you had on demand and all those things on Sky. It was like, if it's on, you can see it, but if it's not, you can't see it, right? It's like, you snooze, you lose, you miss it. That was it. So, going to the cinema was a big ordeal. Like going to the cinema was like, yeah, it's an event, it's a day out. You sit in the seat and you're like, wow. Now, I don't know if it's just because I was younger at the time that maybe the whole thing was more magical to me, and I'm older now and it's not as magical. I don't know if it's just the whole industry in itself has kind of moved on and changed. But, you know, even, as the years went on, you could see like these places became a bit more rundown, a bit more derelict. People weren't like in there as it used to be. Like I remember when you used to wait for your screening, you'd have to sit outside and there'd be loads of people. You're just waiting for the screen to finish, everybody to come out before you go in. And then when you come out of yours, you're seeing like loads of people outside waiting for the next screen. And like it was a whole like big event at one time. And then now, that same place that, was so magical and such an event for me as a kid, and I think it shut down about, I don't know how many years ago, almost 10 years maybe. Like the site was derelict for a long time. And, even like if you go on YouTube, you can see like a lot of these videos of people that explore abandoned places, and like they explore abandoned movie theaters and things like that. And, they're kind of, I wouldn't say pristine, but they're in good shape. They're just closed down. Like a lot of these, they might have a little bit of damage or wear and tear, or somebody's broken in and stolen the copper pipes and things along those lines. But, generally it's kind of like they just all of a sudden just kind of closed a lot of them down. So this whole AMC play was, really a reflection of that whole situation. A lot of these cinema chains were on the ropes as it was. And then with this COVID coming in and the lockdowns and things like that, a lot of these major investors, looked at these cinema chains and looked at the whole industry as a whole and thought that, it's gonna take a major hit, and right, and this is the time to really short it, because we can see that this is on its way out, on its way down. Let me just read your comment, Neil. It's just too expensive now. You only have to wait a couple of months now before you can see a movie on your streaming service, and you don't get overpriced stale popcorn. And you say you have to wait a few months. Sometimes they release it now streaming at the same time in the cinema. So now we're at the point now when a new film comes out, you have the choice to either go to the cinema or watch it at home. This is the latest blockbuster film. And it's funny you say about overpriced stale popcorn. The popcorn is really overpriced. But you know what's funny? It's not really the popcorn that's overpriced. I don't know if you know this, but the the little carton that you get, the popcorn is actually more expensive than the popcorn. So, these cinema owners will complain if you throw away the box, but not so much if you throw away the popcorn. Like the popcorn is so cheap. I mean, if you think about it's corn, how cheap is corn? Like there are fields and fields and fields of it, and corn is not an expensive commodity, right? It's used in so many different things, and it's so abundant that it's not really expensive. And when you think about what popcorn really is, it's literally the corn fried in some oil with a bit of sugar on top or a bit of salt on top. That's it, really. So, the actual popcorn carton costs more than the popcorn. And I don't know if you know much about how cinemas really work, but a lot of these days, the money that you pay to go in to watch a film at the cinema, the majority of it, if not all of it, doesn't go to the actual cinema. The actual money that you pay to go in goes to the filmmakers, whoever the distributor is and the producer and all of those things. All of that money goes directly to the film producers and the filmmakers and things like that, right? How the actual cinemas make their money, they make their money off of, the concessions, the popcorns, the hot dogs, the nachos, the drinks, the chocolates, all of that stuff is where they actually make their money. So this is why you say it's overpriced and things like that. The reason why the price is so high is because that is essentially how they make their money, how they pay their staff, and how they keep the doors open. Um, yeah, it's funny. So, and I don't know if you notice more and more, like a lot of these cinemas are having less people, working in there and ushering in there. It's funny. Last time I was in America, we went to the cinema. We went in there and watched the film, and like obviously we went in, showed our tickets. I think we bought tickets or showed the tickets or whatever it was. We went to the concessions, bought all of our snacks and whatnot, and went in and watched the film. When we came out of the film, there was actually nobody there working. Like they'd all gone home, and you literally just had to let yourself out. You had to push the little fire escape door thing to let yourself out, and that was it. And I was like, wow, that kind of really, kind of shocked me. Like that's how that's how people are doing it now. We do our job and then we go home. You see yourselves out, sort of thing. So yeah, it was kind of like really, really interesting. So this is like the whole environment that we're looking. What was surrounding this whole AMC thing. So a lot of these big institutional investors really took the time to understand the market and things like that, and said, well, we're having it's on the ropes already, and then we're getting this whole COVID situation. So it wasn't a bad shot or a bad idea to short AMC in terms of a stock if you're looking at a fundamental play, right? But you know, since this whole GameStop and AMC short squeeze, the Wall Street bets and all of these things, the landscape and the market has changed quite drastically. I mean, it's changed in the sense of, access to the markets, right? For once upon a time, you couldn't trade the stock market unless you was on the stock market floor and at the exchange floor shouting, buy, 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 sell, 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 and people waving around paper and pointing and signaling to each other and all of these things, right? This was how the market used to be, right? But as time has gone forward, I mean, I don't know if you've watched the video about I think it was the ticker symbol in the investment syllabus, but in there I break down, where the name of the ticker comes from. Like the ticker is basically the symbol. So you can see on the screen we have DX1 apostrophe. So that would be classed as a ticker, right? It's a symbol search in there. Symbol is short for ticker symbol. And the ticker comes from the sound that it was basically what we see as price. Now, I don't, when you see like ticker boards, I don't know if you know what a ticker board is. Can I search in here? Yeah, I can search it here. Board, I don't know how you would, what is it called? The electronic ticker board. Ticker board stocks. So if I go for images, like something like this is a ticker board, Yeah, so, those things there were originally how people used to view stocks. So you would come through. I mean, I don't know how it was. It was some kind of electronic, printing communication between printers, right? And then they used to print out, the price and value used to come in periodically. So it wasn't like real time. It was like, every so often they'd call the new price of the stock or whatnot. And you used to have to go up to the window and actually, when you get to the window, you'd have to basically call your buy, your sell or whatever before the next, update was printed in the ticker machine. And it was called a ticker because it used to make a ticking noise as it printed. It was like a ticking sort of sound as it printed the numbers and the prices and things like that, right? So that was the original like ticker thing, and then we updated to obviously the electronic. That's what the Nasdaq is. The Nasdaq is all about electronic trading and things along those lines, right? So we went from the paper ticker printing to the electronic tickers, right? So this is a step up. We're moving more into the digital age, and then time moved forward to now at the point where the retail investor can be at home, log into their computer, and nowadays you can log into an app on your phone and you can buy, sell, and trade and things like that, right? So the industry has come quite a long way since the original days of trading and investing. So a lot of these institutions are kind of more used to that style of trading, but now because we have more access to the markets for retail traders, this has changed the whole overall market, because now they have to more consider, me, you, and the rest of the retail traders, right? We now actually have a voice. We can be heard in this game, right? It's no longer just about, those who had the access and who know who, and nepotism, and those people dictated to us what the markets are, and you can't get a piece of any of these stock markets and make money in any of the markets, right? This was a whole, at the time it was like a, what they call it, like, is it like an oligarchy, like a monopoly on the system. But now, as more and more retail traders not only get access, but the climate is changing in terms of retail traders and what people really want to do. It's like, you know, now, especially with the whole crypto wave, a lot more people are becoming more interested in investing in, in commodities and stocks and shares and things like that. And initially, you said, I said like crypto is a big one, but even before that, the whole forex thing, the forex markets are quite big. A lot of people are into forex and trading forex and things like that. And then there's the stock side of things where a lot of people are heavy into trading stocks back and forth. And then the whole trading commodity, like, I'm sure you've heard of people saying about, let's trade gold, and gold is a solid commodity. So, as we go forward, more and more people are kind of not only having more access to these things, but having like a better understanding of, how these things work and how you can get into it. I mean, on the YouTubes, you can see that, how many people are there trading with whatever wild styles they've got and things like that. But this is a democratized thing right now. So, you know, a lot of these investors coming in, and these institutional investors, coming in with the same mindset that they've had for years, maybe have not really caught up to what is going on with the retail investor. So the issue with that is, there are added elements and added factors. It's almost like how, how we see the whole cancel era. Right now, we're in the cancel era where people say, oh, you're cancelled. You do something that we don't like. And it's like, oh, you're cancelled. And like a lot of people are being tried in the court of social media right now. The power of social media could, get your whole, everything shut down, your business and everything. I mean, look at Bill Cosby, you know, before he even went to trial and all of those things, people were taking off Cosby Show off of the air, and nothing to do with Cosby was allowed to be put forward. And, we're living in an era where, you're guilty before proven innocent, especially if you're like a black man or something along those lines, right? If you do anything out of foot, it's like people want to judge you. And even if you do get found guilty and serve your time, it's like, it's really hard for you to come back from that, right? So this is the era that we're in. We're in a real era where, perception is reality, and, the narrative of the people and the mainstream can really affect you, if you're in those sort of circles or in those spaces where, you could be judged by the court of public opinion, right? So, the power of the everyday person is a massive factor. And I think a lot of these major institutional funds are in a position where, they've had it their way for so long. It's like us against the peasants. We don't really have time for, anybody else. We're just doing our thing. We're making thousands upon thousands, tens of thousands, if not hundreds of thousands by lunchtime. And we go off and we snort our cocaine and drink champagne. I mean, we've all seen like the Wolf of Wall Street, what kind of lifestyles and things that they live in. And, that is based on true stories. That's not like, I mean, I don't want to say it's not an exaggeration, but it's from some of the stories that I've heard of things that actually do go on. Like, I'm inclined to say that that's not an exaggeration of the things that they were doing. I mean, a lot of them were doing half days on Fridays, and so lots of alcohol, drugs, prostitutes. Like, they were literally living up. They were living like kings, like doing minimal work for a few hours and then just literally, partying and wasting away and wasting all of these things. So, they've had decades of having it their own way. I mean, even if you look at the financial crisis of '08, a lot of these people ruined everything, did a bad job, and the government just came and said, "Oh, well, you're too big to fail. We'll let us bail you out." So it's almost like a lawlessness. It's, to go back to the whole Wild Wild West strategy, is like a lawlessness. People can do what they want, and there's, a lot of it is there's no repercussions. This is not even including the fact that they have loads of money. You know how people with money, the rules and laws can be bent. Once you have money, so the golden rule: he who has the gold makes the rules. So so there's really like an ingrained culture of these, a lot of these people in investments and trading and stocks and all these things, of really having an environment where they can essentially do whatever the hell they want. I mean, there's, certain videos on YouTube of, these investors and traders explaining, what life was like. I think I've even got some of them in the kind of educational materials, the educational materials part of the investment syllabus. I think I forget the guy's Martin Skrill. I keep getting him mixed up with Martin Shkreli, the one that bought the Wu-Tang album and bought the vaccines to something or the other. It's not him. I think it's Martin Skrill. I forget how to pronounce his name. But he talks a lot about those things as well, a lot about the environment that a lot of these investors um, was involved in, a lot of the environments and the parties and the lifestyle that goes on with it. I mean, even in one of the videos I've got in there, you see him, he's doing interviews from all over the world. I think one point he's in the Middle East, next point he's in Australia, I think next point he's in London. And, this is the kind of lifestyle. So, these guys are used to living like kings, and, the money gives them a kind of, F you attitude to anybody else. It's like, they don't have to listen to anybody. We're kind of cream of the crop. We're top of the pie. We're part of the elite. We're really living life and doing it how we're supposed to. And then the industry changes. And then you find out that actually, these investors, these retail investors, average Joe blogs, a lot of them that don't really know how to trade and don't really understand markets and are just going in there on a whim, actually, can get into the markets and have access to them as well. So, as somebody who's a trained investor, I don't blame them for thinking, these, they call it stupid money, people coming in, they're not to be listened to and they're not to be, taken seriously and things like that. But, as I said, because of the type of era that we're in, and it's more about democratizing power and giving access to the layperson, it's like you have to now start considering, what these people are, what their people's views are and what the management of, their opinion. I mean, it's like anybody in power, right? That's what politics is essentially about, right? Politics is controlling of the public hearts and minds, right? It's literally about putting propaganda out and putting narratives in order to do what you want. So, let's take, for instance, this Ukraine-Russia situation, right? We know that NATO has a certain amount of power and they have the ability to do things. Even if you look, let's not even go to that. Let's talk about, the attack on Afghanistan, right? They are way more overpowered than the Afghans in Afghanistan, right? If they really wanted to go strong arm, go Debo, go barbarian, go Dothraki, just go in there straight crazy and just, take everybody over and just do that. They can do that. But the issue is, the people will always have more power than the individuals, right? The people as a collective will always have more power than any individual person. So, you can do the bully boy thing, but once you do the bully boy thing, excuse me, it's like you have to face the backlash from, the rest of the public, and the public can eventually overthrow you. So, you've got to create narratives that provide for cover in order for you to go and do your thing. So you have to say, there's weapons of mass destruction and there's this and there's that and all of those things. But all of these things pacify the general public, right? It's a way of, handling or controlling, the perception and the power of, the general public that then allows you to go and do what you really wanted to do and have the blessings of the people, right? You don't want to be at odds with the majority of the people because, again, you're not going to beat the majority of the people, no matter what it is. You could be right, but if the majority of the people think you're wrong, then public opinion declares you wrong, right? So I think a lot of these, fat cat investors have, lived so high off the hog that they've kind of lost sight of this thing. So when they've gone, all right, then, let's ignore the retail trader. This is where they've messed up. And in terms of the whole AMC things, reason why you have to consider the general public and the masses is because, as I said before, you know, I gave you the example of, my experiences of going to the cinema. These are things that are ingrained to me as as a child, it's ingrained to others' children, the experiences that we've had, who we went with, if we went with parents, if we took a girl there, or, we went with our friends. And, I remember they used to do free cinema day. I know they did it recently. I think it was like any movie for like £1 or £3 or something recently. But I remember they used to have a day called free cinema day where you could go to the cinema for free. And I don't know what the whole kind of regulations or what before around it was. I think it's like the anniversary of something to do with cinema or something. But I remember this back in the day. So I'm not sure if it coincided with what they had a few weeks ago, which was the £3 day. But this day was free cinema, and you could go and watch any cinema for free. And because of that that fact, it was like they didn't really pay any attention to regulation in terms of seats. So I remember watching a film sitting on the floor. Like it was like they were just piling anybody, and people were sitting on the side, on the walls, and people were sitting at the back on the floor, laying down. Like it was literally they used to pack the cinema out. Like it was like a great experience as a kid. It was just like something different. With your friends there together, chilling out, like watching the cinema, laying down. Obviously, there was carpet in the cinema, so you was laying down on the carpet, watching the cinema, chilling out. Like it's a whole different experience. It's almost like you're chilling in your living room or your bedroom, laying on your bed or something, watching a whole big cinema screen. It's like your own personal cinema screen. And these are all the fond memories I have. So I know other people have fond memories of going to the cinema back in the day and things like that. And, I don't know of any AMC cinemas here at least in the UK or in London, but I know this is a big cinema chain in America. So when you turn around as an investor and say that actually we want to kill off this cinema trade or the cinema chain, sorry, just in order to make a quick buck or a few quick bucks, if people do now have the access to the markets, can see an opportunity to save this, they will do, because they have an emotional attachment and an emotional investment in these things, right? So you always have to consider, the public and, how their feelings about things are, right? So this is where a lot of these large institutional investors messed up. It's because, they didn't perceive, the emotional attachment that they had to it. It's the same thing with GameStop, right? I mean, I'm definitely a gamer. I mean, I don't really get time to do it much now. The PS5 is collecting dust, but going back, I remember I started playing games from ZX Spectrum, coming to Nintendo, the original one, and Super Nintendo, coming through into PlayStation. I think I've had every PlayStation that existed. I went to Xbox for a while as well. I had an Xbox. I mean, I can remember the hours that I spent playing with cousins, and them times I used to play computer with not a care in the world. Used to be up to all hours of the night, not getting sleep. Those times you couldn't, there was no save feature, so you have to leave it on all night if you want to come back and play it until the console gets hot so you can barely touch it. And all of these fond memories you have of meeting people and playing with people and playing certain games. I remember when Street Fighter first came on the Super Nintendo, I couldn't believe it. Like, it blew my mind, because when I was in school, I remember saving like a little bit of my lunch money every day so I could get one game of Street Fighter in at the end of every school day. I used to go to the arcade with my friend, play the Street Fighter, and get one game in, in the arcades. And then I couldn't believe that this Street Fighter was now on the home console, right? It blew my mind. Like, I can play as many games as I want for free. It's exactly like it is in the arcade. It looks the same, it sounds the same, everything. It kind of blew my mind, right? So, there's a whole lot of sentimental value in, to playing computer games, and a lot of people still game very heavily. So, when these investors come to attack GameStop, you're attacking people's memories, attacking people's emotions, their sentiments around all of these things. And, especially when the narrative is, you're trying to kill off these, staples in culture just to make a quick buck. People can get really angry about those things. They can really get people's back up. So, if they have an opportunity to, counteract these major investors, they will. And, you know, as I said, it was not a bad idea for them to short the GameStop and AMC, because we saw the end or tanking of an industry. It even got to the point where AMC made an announcement that said, we're closing our cinemas, we're going out of business. So they're not wrong. They were not wrong, the institutional investors. But what happened was, word got out. Somebody on these websites, spotted that, there was a short squeeze going on AMC, and the initial fundamentals, excuse me, the initial fundamentals of it was that this is a good play. This is a good fundamental play. Let's do it. But that, coupled with obviously the online forums, in tandem with the sentimental value, this thing took on a mind of its own beyond just being a trade, just being, something to invest in. This became like your people you're fighting against, as I said, people's emotions and their memories and things like that. So it became almost like a duty or a crusade of people to not only save this thing that they love and they've got lots of memories with, or lots of memories about. It also became an opportunity to stick it to the man, right? To stick it to these, wealthy fat cats that's been, living off the destruction of our society. I mean, we all saw the whole 2008 debacle and the crash of the markets, and the housing crisis, and how many people went homeless and how many people lost money. And these guys made money off of it. They profited off of it. So a lot of people still have a lot of resentment against a lot of these big investment funds about all of those things, right? So it's like, it's like a two birds with one stone. You can save your memories, or this thing that is sentimental to you in your childhood. You could stick it to the man at the same time that you can perceive is, responsible for a lot of the hardships in your life and things like that. And on top of that, you can maybe make a bit of money. It's to a lot of people, it's a no-brainer. But the issue with that comes in is when, as I said, this is why I call it like a meme stock, or like, it's a hype stock, because the story becomes much more greater than the actual, the investment strategy and smarts behind it, right? So, a lot of people that invested in AMC, number one, probably don't know too much about trading and investing. It's simple. It's the same thing as, Dogecoin in the crypto markets. It's a meme coin. Most people don't really understand it, but they've heard the term cryptocurrencies and Dogecoin. So let's go for that one, because that's the one that has the most familiar name. And it's a similar thing with the AMC. AMC got popular because of its name, and not necessarily at a certain point, it became beyond the fundamentals of the trade, right? People just bought into the story, the narrative, the name. It's a familiar, recognizable name. People hear, okay, this stock went up how much in how short a time? You can make money from it. Somebody put a certain amount of money in and came out the other side of it. Especially if you're getting into trading, you don't really understand how, returns work, and, getting points, in trades and all those things. You just hear, I put a certain amount of money in and I got a certain amount of money back. So people who don't know about investing and trading will think, well, if they did that, I can do the same thing too. And it doesn't become about understanding trading. It doesn't come about, understanding the right time to get into a trade and the right time to exit and things like that. It just becomes about this narrative. And then you start getting away from smart money being invested into things, into, they call it stupid money going into these things, right? So, what starts to happen is those with the smart money start exiting positions because those with the stupid money is pushing the price up. And those with the smart money start realizing, okay, this is the end of the fundamental play. This is the pump before the dump. So as it's pumped, let me get my returns out. I've made my money on the pump and on the rise, and I'm going to take my money out of this stock and, keep my profits. The issue is the narrative is not, the narrative is just getting going, right? Because at that point, this is just after the spike or just after the pump. This is where, everybody has, pushed the stock right up. So now to the uneducated eye, they don't see that this stock has already moved. This is why I always have this saying that, you can't make money off of past price action, right? Because most people's instinct is they will look at a massive spike in a stock and think, okay, that's the one to invest in because it spiked up. The issue is the movement has already taken place, right? And what you're looking at is past price movement. You can't make money for that. The movement has gone, right? And what would have happened is those who have the intelligence to understand how to trade would have made their money along that run and exited at the top. And the issue is the layperson doesn't understand that. And they will see this big spike and jump all at the top, which is the wrong place to jump in. You want to jump in at the bottom and ride it to the top. So now this whole narrative has started taking on a life of its own where, look how high it's risen. Now you're hearing all the people that have exited the trade are telling you their stories, but they're telling your stories because they've exited the trade, right? And they're telling you how much I've made. Oh, I made XYZ amount of money in so many days. And people are hearing that thinking, okay, I can jump in and do the same thing. But the reason they're able to tell you those stories is simply because of the fact they've exited the trade. They've told you this is how much they've made. If they've made this much, that means they've exited from the trade. They've got that money back. So, the move in the place happened, but people are hearing that and thinking, I can just come in now and do the same thing, where that's not the case. The move has already happened and it's already gone. And then what happens is, the romanticism of the trade, the narrative, the story, starts coming in. The how much people have made starts coming in. So all of these start creating to the emotional side of things, and that creates the incentive to keep invested in this asset rather than the fundamentals or the technicals. So, this is why we do technical analysis. The reason why we say we avoid news, noise, and opinions, right? So the whole idea of a short squeeze is that, you push the price up so high that, people can't exit their positions. And as people start exiting their positions, people have to buy stock. So therefore it pushes the price of stock up and it keeps going up and up. And these things are real things. I mean, if you ever look at the story of Volkswagen, like the stock rose so crazy, it was unbelievable. So these things are possible. I mean, even AMC did that. AMC did go for a run, right? But, when that happened, it was for that period of time. And as I said, you're getting different people entering and exiting. People are listening to different kinds of news. Some of them are listening to, fear, uncertainty, and doubt. Some of them are listening to friends. Some of them are listening to all different types of things, right? So, some people are getting scared and pulling out. Some people have already made their money and they're pulling out. And you get this constant rotation of people coming in and coming out. But what happens when you do that is, you can, if you get equal amount of people coming out as coming in, the price doesn't raise. It kind of just settles at a certain level. And the longer it doesn't move, the more chance people start getting fear and they start, wanting to pull out of the trade and things like that. And then what's happening instead of the stock rising up and going up, you're actually seeing the stock come down. I mean, I showed it on the video, MC. You know, look at, I mean, look at this. The stock is going downwards. Let me put my filter on. I think my filter on. Yeah. I mean, if you look at our trend filter, it's all red apart from these last two bars. You know, it was green initially here. You know, this is where we're looking at all of the spikes and things like that and the raises. But, you know, since, you know, July 2021, it's been mostly red, to be honest. I mean, we see a few patches here, and these are a few patches where, you know, this is the initial play, the initial, you know, the initial short squeeze play was here. You can see this area here of this kind of moving sideways, all of this, let me see, all of this area here is, you know, people taking profit, people hearing about the news of how much people have made, pulling out of it, going in, pulling out, constant. This is why these bars look this way. These bars are terrible. Like they're a lot of small bodies. Let me zoom in. There's a lot of small bodies, long wicks. Look how long the wicks are and a lot of these things. So this is where people are coming in and coming out, coming in. As people come in to try and push the price out, people start exiting or coming in and exiting, and all this is going on. But then at a certain point, you know, you look at here, the price actually goes down. Like this is where people are selling more than they're buying. And then we're seeing massive patches of red. You know, you go, let me switch back. If we go forward, we can see that there's equal amounts of buying here as there is selling, as there is buying, as there is selling, as there is buying. And if you look, you know, the green patches are getting smaller and smaller. We had a massive green patch here, it gets smaller here, smaller and smaller and smaller. And this is like an indication of, you know, those that have been in there are actually selling off their position. And then if we look, you know, on a larger scale, if we look on a larger scale, where are we? We can see that the overall shape of this whole market is bearish. It's on a downward spiral. It's on a downward slope. You know, the whole idea of a short squeeze is that, you know, people sell their position and the price goes up. But this is not what we're seeing here. You know, this is the opposite of a squeeze. This is a short release, if you want to put it that way. So much so, if you look even here, we see the death cross. This is telling you that this stock is actually bearish. You know, in order for you to have a short squeeze, you need to have the price continually going up to where it squeezes people to get out of their position, right? And people have to start, you know, negotiating or paying high, silly prices as, you know, their margins are called and things along those lines. But that's not what's happening here. The longer you hold on or wait, the easier it is to exit your position rather than the harder it is to exit your position, right? You know, the whole idea is that the longer you hold, the more money it's taxing you. But here it's not really doing that. Here we're looking at the price of the stock going down. It's getting easier and easier to exit your position. And the easier it becomes, you know, the less of a squeeze it is, right? So, you know, it's crazy. And even if you look at, you know, so we have our death cross here, but then look at the moving averages. It's ordered 200, 50, 20. So it's ordered bearish. So this is actually a bearish stock, which is complete opposite of what we class as a short squeeze, right? A short squeeze is a bullish stock that, you know, squeeze, that's the part of the squeeze. Of the squeeze is that it's harder and harder to exit because it costs you more money to exit your position. But that's not what's happening here. It's becoming easier to exit because, you know, the stock becomes cheaper and cheaper and cheaper. So it's easier to exit, right? And, you know, the whole idea of a short squeeze is that being bearish or going short or opting to sell on a stock is the wrong decision. But here it's not. If you'd have got in here at the top and opted to sell, look how much money you would have made. Look at the difference between you know, the high and the low. Let me take a ruler and see what the difference is between the high and low. So this is the high about here, and this is the low around here. right? So that's, you know, 80, well, let me do it the other way. The difference in percentage is, that's a 439%, So if you'd have shorted at the top, you'd have made 439%, right? You would have been in the money. So being short from the top is the right way. The correct way at the top here would have been to sell. So, it's about understanding, like a lot of people in the short squeeze don't understand what shorting is and don't understand what a short squeeze is. They hear the name, they hear the hype, and they get involved. And this is why we do technical analysis, because it avoids the news, noise, and opinions. You have to understand your strategy, which is why in the investment syllabus, we don't just tell you how to put the trade. We go through each little step, bit by bit, what each indicator does, what the purpose of each part of the strategy is, so that you can have an understanding of why we do these things. It's not just believe me, just go just because I said so. I could be a liar. I could be lying, I could be selling wolf tickets and all of those things. But, I've provided the evidence for you to understand why you're doing these things. So it's not about you believing what I say, it's about you understanding what each one of these indicators do, and understanding how each piece of this, trading strategy comes together to form an overall trading strategy and an overarching trading strategy. And is that in which you put your faith in? You put your faith in you understanding the strategy, what the strategy is doing, and how it's making sense of this wild, wild west of a stock market, right? It's not because there's hype behind it. It's not because there's a name behind these things. It's because the actual technicals and numbers behind these things are the things that make it make sense, right? So again, we're coming full circle into the thing about understanding your trading strategy and having faith in your trading strategy, right? It's really like a commitment to yourself. You're having faith in yourself that no matter what I say as an individual, you understand the trading strategy, and it's you that have faith in your understanding, your knowledge of understanding the trading strategy, and it's that's going to protect you. It's not me selling you hype in order to get involved in it, right? So, this is the reason why I didn't get involved in this, because it doesn't meet my trading strategy, and again, I stand on my trading strategy. It hasn't failed me yet, and I don't think it ever will fail me, right? So this is the whole reason why I didn't invest into AMC. And I'm not saying to anybody that they shouldn't invest in AMC. At the end of the day, it's up to each individual person's choice to do what they want to do with their finances, right? At the end of the day, it's you that's got to justify your decisions to yourself. And if you're happy and comfortable in investing in AMC, then do so. But just understand why you're getting involved in it and what the strategy is and what the play is for AMC, right? So, you know, we're technical traders, we're trend traders. And, for me to give you a strategy or give you a justification as to why I'm investing in something, I can break it down to you. I can go through each one of the time frames in the windows. I can go through each one of the indicators and what the indicators are telling me. I can tell you what price is doing, and that is my justification. That is my justification as to why I enter into any trade. It's not just AMC, it's any trade. Any trade I could sit down and walk through and tell you exactly why I'm investing into a certain trade, right? And, I hope for everybody on the focus on investing to also be able to do that when they get into a trade, they can understand why they do it, and not just understand why they do it. They can actually break down to another person the exact reasoning behind why they got into the trade and understand every element of it. All right. So yeah, as I said, this is why we're trend traders. This is why we're technical traders. And, I wish for everybody to stand on their trading strategy. Okay. So yeah, that that was my breakdown as to, why I didn't get involved in AMC personally. But again, as I said, I'm not judging anybody else for getting involved in it if that's what they want to do. I would just advise that you understand what you're doing and what the play is at hand. All right. So, is there any questions, Neil, before we sign off? All right. Well, it's been a bit of a different session today. We kind of just spoke about the whole, trading industry and the history and the reason behind the technical versus fundamental. Um, yeah, I appreciate you joining me for another Focus on Investing session. I hope you have a great week, and I hope to see you next week. Take care. Peace.